Hey YouTube, I created this whole recession video and I had to scrap the whole thing. So let's get into it right here, why I had to do that. I had a professor of economics over to my birthday party on Saturday. He asked me some very pointed questions and I had to scrap my whole video that I'd already done on the recession. Well, long story short, the Atlanta Fed comes out today with their Q2 quarter two GDP estimate of negative 1%. That makes 2 consecutive quarters of negative GDP. Now, we haven't covered recession before, but a recession is 2 consecutive quarters of negative GDP. Today, the Atlanta Fed announces they're estimating that Q2 GDP is going to come in negative 1%. So now 2 quarters, negative percent, that means we're in a recession. It doesn't mean the recession's starting. It means we've been in a recession. Now, I was going to talk about, in the video I scrapped, I was going to talk about how crypto and tech and things that were priced to sales over 20, all these things were leading indicators of this recession. And now, with this announcement today, I'm fairly certain that the recession started back in November, and it was crypto and tech and price to sales over greater than 20 and small caps. They've all been in a correction. Small caps have been in a correction for 18 months. Crypto and tech led the way down in this recession, and the S&P 500 didn't really start catching up until sometime in January, when we topped, like the 4th of January was the top, and then we've been nothing but down since then. Now, people today in Discord were asking me, oh my gosh, this is, the recession's starting, what are we gonna do? No, the recession started a while back. Welcome to the party. We've been in the recession. That's what's going on. Now, how do you trade it? Well, I've got an epic trade right now that we returned 263% just trading it in June, just in June. And that was on a trade size of 63 cents. That's an option, so it's actually $63. Cost $63 to get in for one contract, and it returned $1.66. That's $166 in June. That's with wins and losses combined. So that's pretty crazy, right? I mean, how many other things are you trading that return 260 something percent? Let's be honest, not much out there. It's pretty tough, right? That's because we're in a recession. Trading recessions is tough. Now, the average recession lasts about 11.1 months. We are looking at being about 7, maybe 8 months into this, possibly only 6, but I'd say it's probably 7 or 8. And then where do I think it's going? Well, I think that we're gonna see some chop for the rest of the summer. Maybe a little, chopping a little higher, working our way a little higher. We could dip down and make a new low, but I think we're gonna see some rally into the end of the summer, and then we're gonna see a pullback into the election, and draft down a bit coming into the election, and then that makes about 12 months since we started. So that kind of puts us past the average recession at 11.1 months, and we can see a market rally from there. Potentially. It doesn't have to, but I think that that's going to kind of wrap it up. We'll be pulling out of the recession by then. Nobody knows how long this is last. Maybe this is a shorter one and we're already done. Like, we already hit the bottom and we're working on coming back out. I don't really know for sure. Nobody knows for sure until the GDP numbers come in for Q3 and Q4 and start telling us what we got. That's what we're working with right now. Everybody wants to know, what's the plan? How do we trade this? Well, right now we're closer to support. Support's underneath. We're closer to the bottom and support levels than we are to the top. So any kind of puts or crash protection or trades that are going to make more money going down, well, you're too late. Let's face it, you're probably too late. We're already potentially near the bottom, or already had the bottom in the market. It's going to be choppy. That's number one. It's going to be choppy. There's no doubt about it. Number two, you're not going to know what the best trade is right now. Now, I'm doing some day trades, and my favorite trade right now is a trade we call the opening bell alerts, and it's on IWM. I'll put a link to it in the description. Go check it out if you're interested. Like I said, that's the trade that returned 260% in June. It's potentially there every day. The market direction has no bearing on it. While strong up days and strong down days are less tradable, but it's a neat little trick I found in the market, and it just works over and over. Beyond that, I have my new beta test system. I'll put a link for that. And it works in slightly down markets. It works in sideways markets. It works really great if we can catch any kind of updraft in the rest of the summer, like I was talking about. That would potentially, you get 9 to 12 potential entries a month. And it's just sitting there working. It's a theta burn trade. It's an income type trade. Now, what else am I doing? Well, sitting on my hands a lot and trying to figure out what the next move in the market is. Now, if we're going to get another big downdraft, I'm trying to be prepared for that. It's still a possibility. It's out there. But I don't think we're going to go a long way. It's not going to go a long way. We just have a slight down potential. Like I said, my economics friend was here. He asked me some pointed questions about PPI. Now, if you want to learn about that, I talked about it on my 30 Minutes of Awesome on Tuesday. Go check that video out. I'll put a link up here. Go check that out. Watch that. Let me know what you think. Make some comments on that video, or come back to this video and make some comments here. Let me know how you think about PPI. Not a lot of people have talked about it. That's the Producer Price Index, and it kind of led this whole thing. Like, starting at the beginning of 2021, it showed that producer prices were going up. And then if you think about it, later in the summer and into the fall, people like Campbell's Soup and Dollar Tree, they were announcing they were going to be raising prices. That was kind of unique, and that's what got the economics professor, PhD, talking to me about PPI, is because these companies were announcing that they were going to raise prices. Now, that was like a inflation being telegraphed into the market. So these companies were actually experiencing inflation on a company producer level way before it ever hit us consumers. Another big clue that I had that we were seeing a recession. Think back to what happened when Target and Walmart and Amazon announced their first quarter results. Target and Walmart were caught with all this excess inventory that they hadn't liquidated. We were just coming out of the holidays. They're pretty good at holiday sales, right? So this meant that the holiday traffic and sales and the stuff that happened right after the holidays, it wasn't working. And that is a strong indicator that we had a recession going. And Q1 GDP came in at minus 1.6%. That all flows together. And then Amazon unloading 10 million square feet of warehouse space. I mean, they're supposed to be on top of this game, right? Some of the best here. Low margin, all this sort of AI predictions and stuff like that on sales. And then we look at energy costs. I mean, they're kind of like ramping out, like exploding higher right now. Oil topped out back in March, and it's kind of been, hovering in the highs here. Price of gas higher than it's ever been nationwide. Well, these are going to have consequences for things like construction and logistics, which logistics have already been pulling back. High interest rates are going to hit the housing, and this could be another downdraft in the markets. Could be as the housing industry comes off of this, and all the construction and all that. It's a real economic driver in our economy. If that actually starts pulling back due to the interest rates and the fuel prices, I had a client in my office today say that people had started calling him looking for work, and he was like, these kind of people don't call me unless there's just no work out there. And that was an interesting thing he said today. So I feel like housing is probably about to come off quite a bit, and that can cause some other pain in the economy and in the airplane passing by. Holy moly. What the heck? Like a C5 Galaxy. We don't get those here. A big old plane. Housing coming off, that's kind of a dangerous thing. Should we play short housing? I don't know. Should we play short energy? Well, energy's been 4 standard deviation outperforming S&P 500 and the broader market. So there's an opportunity for energy to come down. There's also an opportunity for S&P 500 to catch up to where energy is, or something in between where energy keeps pulling back a little bit, S&P ramps back up, they come back in line. They're probably going to come back in line at some point in time. Gold miners and stuff like that are kind of bottoming out. It might be time for gold to take off here. And silver maybe there too, but it's not yet. They're not ready yet. Don't try to catch the falling knife. All right, so that's the things I see. Make sure you follow me, like, subscribe, keep up with this stuff. I'm gonna be back, giving you more updates as we move along. I'm gonna try, I'm starting a class on making better content for YouTube, so I'm gonna try to have some better videos, have some better stuff. So keep up with me, keep following me, and I'll see you on the inside. Check the links, let me know in the comments what other kind of content you want. If you like this recession content or you want something else, let me know. Have a great day, and let's get back to trading.